Hi there, traders. This is Brad Gilbert with the Daily Market Insight for Tuesday, the 14th of September. All right, now this is to me, the big day, the start of the week. A really great opportunity if we can get the US CPI numbers to come out and give us some, some gorgeousness, right? Then then it's really game on. Now, just having a look where the market's set, looks like the 30-year bonds a little bit lower. Overall, they've probably just drifted back a bit. Okay, equity markets really undecided, and that's probably more to do with the US CPI numbers coming out than anything else, right? Higher CPI, higher inflation, potentially higher rates, equities get hit. Lower inflation, equities rally. It's as simple as that. And the dollar will be attached to that interest rate vibe that's been going through the market. So if the treasury yields fall, the dollar falls. If the treasury yields go up, the dollar goes up. Right? The dollar index is evenly poised. So it's all about, you can really just hone in on these US CPI numbers. Now, going back, not that long ago, there used to only be the CPI numbers themselves. Then the Fed started bringing out some core CPI numbers. These are the numbers you need to focus on, the Reuters poll, right? So the core CPI month to month, 0.3. Okay, and the year-on-year 4.2%. Now, you want both lots of inflation numbers, either both being strong or both weak. You don't want sort of a mixed bag because that confuses the market, right? So, and the CPI month-on-month, 0.4, and year-on-year, you've got 5.3%, right? So they're the four numbers that are important to us. Anything like above 5.3 and 4.2, it's going to start pushing all this talk about the tapering talks that are out there at the moment, right? You come back and you have a look at, let me bring you across to the news sort of pages. It's all about the Fed taper talk, right? It's gathering steam. Now, if these US CPI numbers are strong, it goes a long way to making that a reality. If they're weaker, well, then it really detracts from that situation. If they're as expected, well, the taper talks still stay where they are, right? So we have a few things to look at: treasury bonds, see what the impact on equities are. But really, this is one of those numbers which is really sort of polarizing. You can focus on the US CPI numbers. If they're stronger, right, they're both stronger, then we are going to see the dollar rally, right? And the dollar block should fall. Right, you don't have to wait for that movement on the bonds to confirm it, or the equity markets. Okay, I can just give you the full rundown. Let me just change the pen. So strong CPI numbers, right? You should see the treasury yields rally, equities fall, right? The dollar rallies and the dollar block goes off. It's like the same as a risk-off scenario. At the same time, if the numbers are all weak, right, you're going to get treasuries lower, the equities will rally, right? The dollar will fall and the dollar block will rally. The same as a risk-on profile. All right, so what are we trading here? Well, it's a US number, so you're looking at the majors primarily, right? The dollar index really poised for a move to the top side. It is trading sideways with an upward bias at the moment. Once again, I'll tell you what, we're starting to see some big ranges in dollar Swiss, right? It's really getting active, right? So which tells you that the dollar, it's a really game time now. Dollar yen's in the middle of the range, as is, I was saying yesterday, with that movement in dollar CAD, with that dollar strength, oil's now back above $70. It is going to put downward pressure on dollar CAD. So it's left dollar CAD in the middle of the range. I think there's a chance here, though, for the US CPI numbers to have a dollar impact on dollar CAD for the moment. Now, with oil rallying, right, weaker CPI numbers would be an easy trade for dollar CAD. It goes with the current momentum of oil, and that would flow quite easily. You're seeing euro come back towards that resistance level at break. Same with sort of Aussie and Kiwi. No surprise as the market sort of squares up ahead of the US CPI numbers, but we do have levels here to work with. Sterling, we've got UK employment numbers as well coming out earlier in the day. Then we've got the US CPI numbers. Now, we've got support and resistance here on sterling. So it's probably going to have a pretty active day. Right now, when we're looking at the Aussie and Kiwi, well, Aussie's got a bit of a resistance line sort of forming here. So if I just have a look at that, I mean, you want to get all your trend lines up to speed before the numbers come out. Let me just make that a bit more visible. Okay, so you know sort of where these sort of key levels are. So the Aussie now is a bit of a mirror image of Euro. We've got the previous support line, which is acting as resistance. We've got the new resistance line there as well. So that's going to be pretty active. Kiwi's got a pretty similar setup. Once again, sterling doing its own little tap dance, but it will catch up with these other pairs. So to me, it's a pretty clear-cut situation. Strong US CPI, Euro falls, they all should fall. Obviously, sterling dependent on the employment numbers earlier in the day, but especially Euro, Aussie, and Kiwi, right? Strong US CPI and dollar Swiss, it looks like it wants to go. Dollar CAD, strong US numbers, it's going to come up against resistance and it's battling that rallying oil. So it may be an odd bob. I think downside for oil for me is the better opportunity. Now, if we are looking for weaker US CPI numbers, well, the dollar index is going to come under pressure, right? It takes off, it probably takes out the steam out of all this tapering talk. Dollar Swiss should come back into the range. Dollar yen, I'm not sure what it's doing, but weaker CPI, definitely dollar CAD would be a pick. And then you come back into these other pairs, the dollar block, they're going to be doing a bit of hard work on weak US CPI numbers because it's coming back to that natural resistance level where you've got selling in Euro, Aussie, Kiwi, and a little bit in sterling as well. So really, to me, once again, we're seeing these build-ups and we aren't seeing the final number drop. Strong numbers is our best opportunity on a lot of these pairs because the dollar will rally. Clearly, it sort of has that sort of bias at the moment. So that's my best trading solution. Prepare for both sides of it. It's hard to mentally get your head around looking at the numbers, checking out, say, the 4 different variables, making sure they're all either strong or weak, right? The core numbers as well as the month and year-on-year numbers. So that's what we've got to look forward to, right? It's the dynamics of these numbers, put them into the equation. Strong US CPI numbers will be a good trading opportunity for the coming weeks, if not month or two, right? That's what it's going to give us. That's why I like the strong US numbers scenario. Now, if you want to sort of be a contrarian, you know what? Every time we get a build up like this, the market fails to deliver. So if you're a bit of a contrarian, to me, it might be worth a bit of a just go against the trend of what we need to focus on where things can be. Employment was slightly weaker. Maybe inflation dropped off. I'm not sure. But I'll tell you what, the contrarian view has been a bit of a nice one of late. Now, big moves, load up, strong US numbers. We're going to see high yields. Equity markets should come off. We're going to see the dollar rally, the dollar pairs rally, and the dollar block fall. We've got levels close around. It's a simple number. There's not like 6 variables, right? Usually, like the non-farm payrolls. So it is a good trading opportunity and sets the tone not only for the day's trading, but for the rest of the week and the coming weeks as well, right? So non-farm payrolls first week. We've got the US CPI. We've got like a month before or 3 weeks before the next non-farm payrolls. So this is why it's important because it gives us the dollar direction for the next 2 to 3 weeks potentially. All right, guys, all the very best. Make sure you cover all bases. And most importantly, think about your risk management. You don't want to go in here with boots and all, because if you think about if you have a loss here, what does that do to your capital account and your confidence? This is another trade to get us some cash in the account. It has a bit more structure because it's what everyone's talking about. The Fed tapering talks. And you know what? It will go a long way to other central banks starting to bring up the same discussion like we saw last week from the ECB, RBA, everyone's starting to get into the move. We need the Fed to lead the way. This would be the best outcome. Good luck, guys. It's a great opportunity. All the very best. Cheerio.